So we're back and I'm gonna explain to you the anatomy of a candlestick, right? The reason why I'm gonna explain the anatomy of a candlestick in this way is because the first video was too long and I feel like you'd get bored. This is something you should get if you're willing to learn the full extent of the candlestick anatomy, right? So I'm gonna be focusing on one candlestick. The reason for that is because the same rules apply to each and every candlestick, right? So I'm gonna use one candlestick. So this is the candlestick I've chosen, right? We're not going to use today's candlestick because today's candlestick is going, and as you can see, it's still going on itself that direction, right? So what do we notice is, first of all, right, the market has a wick, right? That means the upper body, this part of the market, right? And then this part of the market. That means the market has been here. It has been bullish for a solid. The market has been bullish, had shown sign of being bullish at this time, right? So, and then the market came back into a bearish structure, which means a bearish movement, which means people were trapped here. People were going for buys. The reason why people were going for buys usually is the case of sniper shot entry. A lot of traders get trapped and with the illusion that they can always catch sniper shot entries, right? So they entered for buys, and then as the market continued to move, it came down, wiping their accounts and continuing to catch liquidity on the way down, right? Right over here, the market came down and came back, right? So what do we notice on the candlestick anatomy is that the only thing that matters really in the market, the true power that lies within the market, is the body of the market. This is this area, right? So we need to remove these areas, right? These wicks, they serve of very little importance in the grand scheme of things, right? So I'm going to move on to a lower time frame so you can see what I'm talking about, right? Right here, the buyers were being trapped. People were placing buys, immature traders, people who don't know what they're doing, are placing buys, right? The experienced day traders knew that the trend, since from before it was coming from above, they continued the trend, right? And placed sells, right? They placed sells, and those sells are the ones that were later in profit, right? So when the market came down, in profit. I'm also going to give a strategy that is easy to use, but I don't use it now simply because the risk to reward can be very low depending, yes. So yeah, so buys were trapped in this area, especially round about here when the market came back, gave this, because this in the standard price action book you get, it is known as a bullish signal. So a lot of people came in right about here. They came in, buy, caught that sniper, I'm a champion. The market came back down and wiped their accounts, right? So the few that went in for a sell at this moment, right, they are also aware of the powers inside of a candlestick, a single candlestick, right? So when the market pushed down, they caught it and then they continued living their lives, right? So what does a candlestick mean, right? So at this moment, the market opened. At this moment right here, the market opened, right? This is the daily high, right? And the market, this is the daily low, and the market closed round about here, right? And then the market opened for today's trades around here, right? The daily high is around here, but it could change if the market decides to shoot up. I'm not going to be analyzing USD CAD for today simply because I'm not trading it today. Today the trade is still GBP USD, and a blown account, not a blown account, like a loss taken on NASDAQ for a buy, right? Because I went in too early. I'll show you the analysis on NASDAQ. Here it is, the analysis. I went in here, took out me out right about here. So I'm going to enter again. I'm waiting for the right setup to be completed. This is the structure of NASDAQ as we speak right now, right? So what happens is that the market was going to the downside, right? And then as the market came pushing, it broke the structure, which means it changed in character, changed the character of the market. So now the market is no more a bearish market. It's no more coming from the top. Now it's going to the top. Now it's going to the top, and the only way the market can be changed is if the market crosses this level, right? So I mark down areas that are significant to me, just in case I'm gonna be placing a sell. But I'm not hoping for a sell. It doesn't look like I'm gonna be catching sells. So for now, I'm just gonna, I feel like I'm gonna catch buys. I'm gonna catch buys to the upside, right? The system agreed, I agree, it's a solid movement, right? And then the trades I won't be taking is USD CAD. So I want to explain also deeper, right? When we move on to lower time frames, right, we see where the market truly opened. The market opened here, and then the first 15 minutes of the day, the market went bearish, right? So in the first 15 minutes of the day, the market went bearish, right? Also here, the first 15 minutes, the market went bearish. This is not a signal for how the day is gonna end. You know, it's not a signal, because I can place a trade right here, but I'm not gonna do that. But I can place a trade right here because this is my main account. I don't want I don't want mistakes, right? This is where I like to keep everything neat and efficient. So right here, you can place a buy just to prove that it's not necessarily the case. It's not necessarily the case. The first candlestick of the market just shows how the market opened, right? So over here, we notice that the first trade was a bearish signal. I mean a bearish candle. So when the bearish candle came up, right, also here, but we're focusing on today, right? So yesterday, that is today, the bearish candle came here, and then the market pushed to the upside. Okay, gave a bullish momentum, a short direction to the upside, right? This was to catch first, collect liquidity. When it came down, it was collecting more sells, people who don't know how to place trades. Their stop losses are maybe inside the trade, right? And then when it gave the signal over here, the market started pushing to the upside. When it started pushing to the upside, what we noticed is that a lot of traders were wiped out. A lot of trades were entered. As you can see, there was a impulse to the upside. A lot of trades, because people thought it was in a rush. You know, people thought it's gonna spike to the upside. So a lot of trades were entered. Stop losses maybe around here, if they had stop losses at all. Then the market came down, then continued to push to the downside, wiping out accounts. This is the right here. Killed a lot of traders, right? What we don't see, however, is that this was a one candlestick. This is not a daily candlestick. This, you need to understand that in a single candlestick, there's so much liquidity, right? But the most important part of a candlestick is, I'm going to show you right now. I'm going to pause quickly so I can show you, right? So yeah, I'm back. So what I wanted to do was literally remove the wicks from the candlesticks. This is how this is now power of liquidity. What you're noticing is power of liquidity right here, right? There are no wicks here, there are no traps. This is actually the market right here. What you're witnessing right now is the power of the market, right? So this is it. I'm going to explain deeper over time, but for now, this is what you need to understand. This is what you need to know, right? This right here is the power of the market, right? So I'm going to give you an example into understanding also trading psychology, which I feel like it should be taught a little bit more, right? Because for example, you are very good at entries. You entered right here for a sell, right? Entered right here for a sell. You caught it perfectly. You got your signals from whoever, wherever, or you know, whatever. You got the signal, you got the entry, right? Your stop loss is 20-30 pips, around about here. Your stop loss was quite fair. Your stop loss was quite fair right here, right? So when the market started pushing to the downside, right, how many of you could hold? Let me just check again. Oops, sorry sorry about that. How many of you can hold a trade for 55 days, which is 20 days per month? That's 2.5 months. How many of you can hold a trade for 2.5 months? Right, for 2.5 months a trade has been held. You know, this is what the market is displaying right here. What the market is displaying over here is that in 2 months, 2.5 months, you could have caught these amount of pips and whatever the case was, but you were not mentally psyched ready. So what happened is that when the day ended, because you're used to quick money, you close the trade here, right? So you close the trade here. How much did you actually make? You now caught 100 pips and rest 40 pips. It's unnecessary. It's like you're like for two, what for 1 to 2 if you caught the whole thing. You know what I mean? So a lot of psychology needs to be done. This is too complex for YouTube, for Instagram, Twitter, whatever. This is too complex for that. This needs someone who's willing to give you the time. I need to be able to tell you face to face or something like that, right? Because it's too complex. It's too complex, right? So what happens is that, remember, catching of liquidity, the direction to the downside, right? the same applies, right? So also another thing you also need to understand is that a candlestick tells a story of what has happened in that month, right? In that candlestick, right? So round about, okay, we're gonna use this candlestick. At this point, this was the lowest point in that 15 minutes, the highest point of this 15 minutes. The 15 minutes began here and closed here. That's what it means. It just tells a story. It tells a story. And if you're smart, like one of the trading strategies I used to do, and the professionals will have a problem with me giving this training strategy because it's nearly garbage, it's nearly trash, right? So what I did is went to the daily time frame, right? I went to the daily time frame, and then when the market closed, I would continue the direction of the trade, but with my stop loss being on the, for example, let me just show you, right? I'm gonna use this candlestick because it would have been a profitable signal, right? So right here, this is my buy, right? I mean my sell. Round about here would be my stop loss, and I'll just hope for 1 to 2, 1 to 1. It doesn't that intense. Maybe I'll just put it right here, right? And I'll do the same thing right here for right here, and the market will just continue, right? The maths is really what's important. That the maths behind what I was doing, because if I was to tell you that, like, I feel like if I was to have a session with one of you guys and explain to you what I mean when I mean the maths, what I mean when I say real market, you would change your way you see the market. It could change the way you see the market. So I feel like that is it for this video. Remember that we're looking for a buy on Nasdaq. It's nothing that hectic, not here per se. We're just waiting for something to show us the direction to the upside. So what the market can do is that the market can come back down and then push up, or can tap here, push up, tap here, push up. We're also looking at fundamentals for this trade, right? Because right now I'm a mentor, apparently. Not like I'm a mentor, I mean like social media trader. So I need to be accurate. Now it's no more a thing of understanding by myself and trading by myself, right? Because I took a loss right here. I'm gonna show you the account. The account started with 5k and now it's sitting on 49 rand, 49 ZAL. So yeah, a loss was taken, but it is what it is. Because during the day, the profit, like at the time, because the market spiked to the upside, I was like, it's going to the moon. It didn't go to the moon. Went up to 20k and then came back down, right? So that's it for the trade. Peace. Enjoy the rest of the day.